Okay, so we were there yesterday. That wave C actually took us down to 97. You're looking here at that 50-minute chart. The market now is a very strong buy opportunity. There was a 1-2 here. There's a 3-1. We didn't expect to test the neckline once more time, but it turns out that we did test the neckline. There's an ABC. You can see it all clearly here. We just should have been more patient. We had bought earlier, I believe, but if you're not yet in the market, now is a golden opportunity to be in the market. This market's on 97 right now. It's at 97, and you see the structure right here before us. So we buy sorry, that level C, which is the bottom of 3-2. We are really excellently in position so long as we're above level 1. We know this is going to the next neckline, 110, 111, if not higher. So let's take a look now. That is the same 1 hour chart. We were looking, of course, at a 15-minute chart. It's the same ABC formation. We bounced at level 1. Let's take a look at the internals. All right, so we still are going to have another leg down, actually. That C is an A and a B and a C, to be frank. Why would we think this? Because the current labels would mark that there is a 1-2 here, an internal, that level 2 now, that level 1 drops here, this neckline actually drops here. Okay, so there is an internal 1, an internal 2, all of this is a 3, a much prolonged 3, 1, 2, 3, 4, 5 into 3. Maybe this is the end of C, if this is going to be the end of C. Okay, so again, there is a 1, 2, a 3, 4, and a 5, and then in 4 and a 5. There's an internal 1, internal 2. We have 3 swings into 3. That is end of 3. There is a correction into 4. That was just wave 5, very small. If this is really true, this is the end of that correction. Market should no longer fall. It should just take off from that point on. This is not really apparently clearly shown on that 4-hour, on that 15-minute chart, and therefore we would expect this wave 4 still have the ability to do a 5, take you to 94, 93. We know that this is the important level to consider. We expect a bounce at this level. So let's just take these lines also. So let's do the labels so that we can all have them on our stations and realize if we are wrong and where to bail out. There's 1, 2, 3, 4, 5. We just go to the high degree 3 right away. Alright, so this is rejecting below level 1. We're gonna have a 5, and that is the end of that correction. Alright, so this is of course a 15-minute chart. We could still get that wave 5, or this could be a 3, there's a 4, there's a it will take time, another wave 5 label. If you're not already in the market, our best entry is 0.95. Of course, we want to be above that neckline. Runs all the way down to 0.9440. Would rather be in at 0.95, and this should go up. If the correction is finished, this is the 15-minute chart. You would want to look at the 5-minute chart to see if they have degree 3 momentum on the 5-minute. Looks like it is just possible to create degree 3 momentum. Probably it will. So let's take a look at this, and not yet confirmed, but if momentum rises above overbought here, we know now that this is an internal 1-2 trigger. You're looking here at a lower wave. This was wave 1, that was wave 2. That's an internal 1 into 2, that's an internal 2, this is an internal 3. Could correct all the way to the top of 1, correct. If this, now this is a 5-minute chart, if this moves above overbought and remains above overbought, then this is the end of C, actually is right here. So there was 4, and then there was a 1, 2, 3, 4, 5. End of C is here, and that is the end of the correction, and the market is actually moving up from that point, and the C is here. So yes, there was a 5, but it is what you call truncated 5. This is 5 here, you know, that was 3, this is 4, 1, 2, 3, 4, 5. Finished, probably, if we get positive momentum, and we're about to get positive momentum, so that is really finished. We're of course above the moving average, so looks like it's finished, the correction is finished, and what we're seeing on the on the 15-minute chart is just a degree 1. It's a degree 1, and the market is a buy. At that point it is 0.98 or 0.9768. Of course you could just buy if you're not already in the market with a stop just at 0.9 or 0.92. We want to have a stop below level 3, and that is it. Confirmation comes in again once we have positive momentum on the 5 minutes. This is only when we get that confirmation, because this will become a valid degree, internal degree 1, 2, and I believe by then you will have just 0 momentum contained above overbought level on the 50-minute charts. Alright, so where is this going? We have been, of course, looking at these charts since yesterday. We're going naturally to the next neckline. That's how we would want to trade it, from neckline to neckline. So we take out this neckline. Next neckline comes in at 1.09. You're looking at these. 50 in between is 1.08. That's when we would expect we're going to be having a higher degree wave A, then we're going to have a wave B. So we would want to take profits really at 110. It is possible usually to go 50% between the two distances, but whenever we have an entry that won't take profits at 50% between the two necklines, it doesn't happen, but it is possible. So going into the weekend, we may consider to take it to 114, at least until tomorrow. Alright, on the weekend we always usually leave targets open. So what you are looking at is, if we're able to close at 114 tomorrow, excellent. We buy on a retraction towards that neckline, okay, and we would take profit open. We're looking at 1.26 and 1.28. With Ethereum and Bitcoin, of course, if we're carrying longs, we would always take profits open on the weekend. We still have 1 day to go. Alright, so that was an ending diagonal. It has now reversed back or converted back to a trending channel, which is a very important and positive development. Seriously, you will want to take it into consideration, because it was going to be an ending diagonal if it's going to reject at level C here, 1.26 and 1.28. We all remember the technical picture. If it's going to become a trending channel, maybe we're going to be breaking out of that ascending triangle altogether. So what would it mean if we're going to be breaking out of that ascending triangle altogether? We are looking at, of course, we just remind ourselves. So if this was an ending diagonal, we'd expect rejection at that neckline at level 1. That's a 4-hour chart. There would be a strong B down, and then we begin to consider if we're going to have another shoulder below the neckline. Now, if this is going to be if this is going to be a trending channel, that first leg will finish at 126 above the neckline. Wave B is going to correct at the neckline, and we are contained inside the trending channel. A trending channel should mean that we break out of this ascending triangle. Alright, and if we break out of this ascending triangle, it's either going to be a zigzag, or it is going to be some kind of a flat that would equate with these heads.